Friday, traders. This is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. And good morning to all of you that has said good morning to me. I don't know if I really, I don't have, I was going to go through the round robin, but I'm not going to do the round robin just yet. We've got some charts we need to get through. So let's start with the euro dollar. Okay. So the euro, chop, 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 suey. So what we did is we respected the 78% retracement, the 786 yesterday, and we're bouncing from them. Now, question is, how far are we going to bounce? I firmly believe that we're in the middle of this apex of this wedge, or this wedge, triangle, whatever you want to call it. We're just right in the middle of it, and we continue to consolidate. So at this point in time, I'm thinking, okay, any significant rally in the euro dollar, I wouldn't mind selling into it. And what I'm looking for is maybe a recovery from that spike high. That was post the employment cost index number on Friday. So a rally back towards, let's just call it 1050, 1045. That'd be a good place to be on the short side of the euro. Because if you think, okay, let's imagine, say the Aussie just hit new highs. Let's imagine the Aussie dollar, gets up to 74 and a quarter. Could that unleash the euro dollar to maybe 110 and a quarter, 110.50? I think so. So, one of these two levels is going to come as resistance. I'm going to go ahead and put in 1045. Okay, 1.1045. I think that will be resistance. We are definitely in a range of bias still, and support right here at 109. I don't know if I want to give us all the way down to 109.30 today. That hourly spike low should offer us some support, but that's just really close to where we're at. I'll write down 109.30. I mean, 109.30 should offer great support today. I doubt we're even going to see it, but we don't. I mean, the only data we have today is factory orders. So what? I don't foresee that being a market mover today. Again, all I'm expecting is a lot of kind of choppiness today. Wednesday, Thursday, Friday, that's where we have ADP, non-farm, tomorrow. We'll have ISM services numbers tomorrow. Thursday, we'll have weekly unemployment claims and something else on Thursday. And then up at on Friday, we're going to have non-farm payroll. So obviously, the real data starts Wednesday, Thursday, Friday. So today is just a lot of chop. That's why I think you want to sell in the strength or buy U.S. dollar weakness if you can today, because we're going to still stay within this apex. So just let it hit a key resistance if possible. Now the pound. Construction PMI came in a little worse than expected overnight, and you can see that was the red bar there. We're recovering a little bit just because we're seeing some dollar weakness come through the market, generally speaking. But the question is, how far is the cable going to go? I mean, I think we're confined right here by, these prices here. So you can say, okay, well, resistance comes in at 156.85. Support, it's going to be right through here now, 155.50, and you just kind of trade within this range. So selling rallies to 156.70, 156.80 would be probably a decent idea. 156.85 is resistance, and 155.50 We're in a range. Okay. Kind of trade the range. Let's go into the Swissy. Swissy actually looks pretty firm. Like I showed you earlier, this is what the Swiss pairs look like. They look strong, and I'm happy with that. Yes, sir, Bob. Okay, so let's go to the dollar Swiss. So the dollar Swiss is holding up very well, despite the the dollar weakness that we're seeing. Dollar Swiss isn't showing it. Key resistance, as you guys know, is 97 and a quarter. If we break through that, we're going to see a whole new surge in the Swiss pairs. So 0.9725. We'll put double asterisk there. Why is it so important? Because if you go over to the daily chart, if you take the spike high that's following the Swiss National Bank, we don't, for those of you that are newer listeners, okay, if you're newer, like within the last, let's say, month or two, let me reiterate about this. We don't look at that number. This is a no-no. We don't look at that number. We don't gauge fib levels from it. We don't measure from it. You can't, because you know what? If you pull up your broker and my broker are going to have different data. Okay? And your broker, my broker are going to be different than her broker. And then the three of our brokers are going to be different than his broker. Okay? Every broker has a different price for a low, so we don't use that number to measure from. Okay? But you can see post-Swiss National Bank removing the floor, recovery. Since we all peaked there, and we all hit a low here, wherever you want to draw it, those numbers are the same. Okay, so with that being said, the 618 retracement is 97.21, 97.25. That's key resistance. If we clear that, it's already a bullish trend. Why is it a bullish trend? Because once we broke out this breakout point, it's been bullish ever since. But if we clear that 97.25, it's breaking out. Also, there's 127% extension there, if I'm not mistaken. Oh, I'm sorry. It's just resistance. But if we clear that, all those Swiss pairs are continuing higher. Okay, it'll be a big deal. Support. Well, obviously our hourly support is going to be pretty key today, and so that comes in at 96. Let's just call it 96.70. It's actually 65. The low was 96.66, so 96.65. That's going to be support today. Okay. All right. Let's go take a look at the yen. So one of the things we got to watch. We got to watch the equity markets today. As if you're a little late tuning in, like I said, Apple closed below 120. Apple closed below its 200-day moving average, and you're going to have to watch Apple really closely if you guys are playing turnaround Tuesday in the markets. If you guys are playing Tuesday, turnaround Tuesday, turnaround Tuesday, turnaround Tuesday. If you're playing turnaround Tuesday in the equity markets, you have to be very careful, because Apple did have a very negative close yesterday, and if Apple continues to move lower today, it's gonna put a dark cloud over the equity markets. And it's gonna be real tough for the equity markets to continue to rally without Apple. So, with that being said, Got to watch the dollar yen too, because if the dollar yen takes out this trend line here, that's an hourly trend line, we might see some yen pairs come off a little bit. So 123.80 right now is support. Now 124.50 I think is what we've been writing down. 124.50 to 124.65. Okay. So dollar yen 123.80. It's pretty key support. 124.50, 124.65. Range bound. Let's go over the Canadian. So the Canadian, it looks extremely resilient. This dollar Canadian, extremely resilient. We've dipped to 131 or close to. I had a bid at 131 overnight, didn't get hit. The low is 131.06. Of course, I missed it by 5 or 6 pips. Don't get hit, and it bounces. That's still pretty strong support. However, it looks like we're trying to inch our way down towards 131. So you have to imagine there might be a little bit of a might stop out a few traders below 131, so we might actually drop to 130.90. Okay, so although I think 131 is support, you got to allow for a little bit of stop loss running. Okay, so I think if it drops to 130.90, you want to be a buyer down there. I actually have adjusted my bid, so 130.90 is going to be support. Resistance is 131.75. Hold on really quick. Where's my remote control? There's a new show on CNBC called West Texas Investors Club. It's so loud on my screen right now. So 131.75 is resistance. Now, I want you guys to take a good look at the longer term charts in the dollar Canadian really quick, so you guys understand why I'm bullish here. Okay, we're in major breakout territory, so dips are going to be very well supported. If there's any currency right now that is breaking out, it's the dollar Canadian. That's why I'm adamant about trying to buy dips when I can get it. This is a huge cup and handle pattern. That huge cup and handle pattern that it points to 160. It doesn't mean we're going to go to 160 tomorrow, but what that means is the path of least resistance is higher. And as you guys know, I think the next stop is 134. We have 127% extension, or I'm sorry, 161% extension. It comes in at 133.80. That's from the last pullback. Okay, that comes in at 133.80. Then we have a monthly or weekly 618 retracement of the last couple of decades that comes in at 134.50. So I think we're going to 134 relatively quick, like within the next couple of weeks. So I'm trying to buy the dollar Canadian on dips to prepare myself for a move up to 134.50 or 134 rather. Okay, that's why I'm trying to buy it down at 131. I want to make sure that I have, I want to make sure that I get long as we dip down towards those levels, because I believe we're going up to 134. It's just a matter of time. But it's just trying to get a good price, I could just run out and buy it right now, 131.25, and I think if I close my eyes for the next 3 weeks, I'll probably be happy that I did it. Okay, because they'll probably be trading 133, 134 in the next 2-3 weeks. But that doesn't mean that that's the best price that we can get. We might be able to get a price down at 131, maybe 130.60. I think there's going to be some decent values to get the dollar Canadian. We just got to try to wait for it. So anyway, That's just the longer term view of the dollar Canadian, in case you are not aware. Um, Jonas says, coming up later, Blake Morrow performing the hit song Turnaround Tuesday, the song that got him on the Mafia's hit list. Funny. I'm, I might have a bounty for my head after singing that silly song. Mm, funny, funny, funny. Okay, let's go back over to the Kiwi. Uh, Kristen says ditto for the hit list. It's funny. Okay, here's the Kiwi dollar. All right, so the Kiwi, which also is showing some signs of life thanks to the Aussie dollar. I'm short the pound New Zealand from yesterday, by the way. So I'm sitting in a pound New Zealand short, which I'm happy to be short a little bit of pound New Zealand. If you guys didn't catch that from yesterday, the New Zealand dollar, is firming up here now. Yesterday we were waiting for a move up to 66.50. Today, Melissa says, "Good morning. Your singing reminds us that you are human." Laugh out loud. Yes, because I'm horrible singing at singing, just like most of you, except when we're in the shower. In the shower, I'm a really good. I mean, I can sing like it's nobody's business in the shower. All right, I'm sure you can too. So the 127% extension of this last move lower. Oops, let me make sure I got that right to the pip. That comes in at 66.28. This downtrend line, it's we never made it to 66.50 yesterday, which we were hoping to do. Like we were hoping for a spike back up here. But today, if we get a spike up to 66 and a quarter, maybe 66.30, that would be good resistance. Probably not a bad place to be on the short side of the Kiwi. Now we are in a bearish trend still. I'm not. I'm not 100% convinced that the Kiwi is done going lower. I'm just not. Okay. I think we're consolidating support for the Kiwi. Very strong on moves down to 65.50. We even wrote that overnight. So 0.6550. That's becoming pretty strong support down there. Let's go take a look at this Aussie dollar. So the question that you are all asking is the Aussie dollar still bearish? Personally, I believe it's still bearish. But are we moving up into a trend line that can actually turn us into more of a neutral trend? Yes. That comes in at 74, let's just call it 74.50. But I believe anywhere between 74 and a quarter to 74.50 is going to be, well, here, this is 74 high to low. Let's see, low goes right. 74.27, so let's just call it 74.30. Then you have this 24% retracement. Yeah, this 24% retracement comes in at, I'm sorry, right here at 74.53. Okay, so and then you have this downtrend line that comes into play right at the same spot. So that's 74. Let's 30. So between 74.30, 74.50, that's all significant, you know, resistance. So while we're below that 74.50, we are in a bearish trend. Okay. Now we could break out, and it's entirely possible we break higher. I am looking to short the Aussie dollar on a rally up to the 74.20 to 30 level. Okay. We might even get up there while I'm on air today. But I am looking for a short up there because that's, in my opinion, a very manageable place to be short. Because if you get short at 74, let's say 30, you maybe only have to risk 30 or 40 pips to make 100 back down. It's great risk reward. But I know if we break it and we break 74.50, then now we're starting a much bigger recovery in the Aussie dollar. Okay? So the Aussie right now, I think, is coming up to a quote unquote sell zone that I'm looking to actually participate in, even following the RBA and their moves overnight. Okay, support now for the Aussie. Now you're going to find support on dips. So I would think now dips down to 73.50 are going to be supported. So dips down to 73.50 are going to be supported. Also down to 73.10 if we make it all the way down there, but I doubt we're going to make it all the way down there today. But those are, these are really support levels now that come into play in the Aussie right through here. Okay. So dips, if you're like, well, Blake, I think the RBA has turned and they're not dovish anymore. I want to actually be long the Aussie. Well, I wouldn't chase the Aussie right now. I'd buy it on a 50 pip dip if you can get it. Okay. All right. When I come back, we're going to do the dollar index. We'll take a look at the peso, the Swedish krona, Norwegian krona. Don't go anywhere. I'll be back in a few minutes. Thanks everybody for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. So Dow futures have improved a little bit as we've come off the lows. All right, but what we got to do still is we got to look at the dollar index. Oh, hold on really quick. I was going to try to pull up the dollar index, but I do not have TradingView at the moment. So TradingView is not running. Okay, well, with that being said, it looks like I will go over to, we'll skip the dollar index for now. We'll go over to the peso. Okay, now the peso, we talked about it. I want to make sure you see the longer term view here of the peso. So there's our channel, and I'm going to delete these fibs. Okay, the weekly chart closed last week in pretty negative territory. Okay, we had a breakout, reversal, and we basically had given us a false breakout, on the weekly chart. Okay, you can see that weekly candle, pretty negative. So what I was hoping to do for those of you guys that trade the peso is maybe get a little bit of a rally to sell into some strength, which we didn't. We only made it up to 38% retracement. We didn't make it to the 618. I still think that if we make it up to the 618, it's going to be a good place to be on the short side. Now, I'll have to just move everything over, basically. If we can rally to 1630, that's going to be a good place to be short. 16 is going to be support. And so it's the same numbers as yesterday. 16 even as support, 1630 is going to be the hold on really quick, let me put in just a very, it's still a very bullish trend, but if you can sell it into strength, that'd be, preferable, okay, for the peso. Let's go to the Norwegian krona. So crude oil has recovered a little bit, and that pulled the Norwegian krona from resistance once again. Look at how important that resistance is at 827. 827 to 810. We're still in a bullish trend. But we're rejecting off of that resistance, which is telling us how vitally important that is. So here's the Norwegian krona. 8.2700 asterisk asterisk. That's a huge level of resistance. If we ever clear that, it's going to be mayhem for the Norwegian krona. Let's go to the Swedish krona. Swedish krona is more range bound, but again, really key resistance there, 867. Look at how big that was. $8.67. This is a range, not like the U.S. dollar Norwegian krona that's up towards the upper end. We're not that close to resistance. I mean, I still think it's pretty bullish, but we just have to clear that to turn bullish. Support is at 850 again. Okay, so there's your bias chart. We don't have the dollar index because looks like trading view is down right now for me. So there you go. Is trading view down for any of you guys?